Good evening. Welcome to We Mean Business. I'm Manisha Nair Dhawan. Factory output barely grew in February, but even this is being welcomed as expectations were driven so low that many experts were expecting a contraction. Consumer inflation in March has also receded marginally, though it still remains in double digits. Does February's factory data suggest that the economy has bottomed out? Will lower consumer inflation give more headroom to the RBI to cut rates and revive growth? To discuss this, we are joined by Rupa Rege Nitsure. She is Chief Economist with Bank of Baroda. We've got Shantanu Dasgupta, Vice President Corporate Affairs and Strategy with Whirlpool of India. We've got Mr. Madan Sabnavis, Chief Economist of CARE Ratings, joining us from Mumbai, as well as Mr. Ajay Bhat, Group CFO of Monnet Ispat Group, who's joining us in our Delhi studios. Before we start the discussion with our guest, Ira Duggal brings us the fine print of February's factory output and March's consumer inflation data.
A bit of breather for the economy, and be very clear, it's just a breather. By no means is it a significant turn in direction or any major relief, but it is a breather, so let's take it as it is. Two data points coming in today, divergent data points, but both important. We've got the industrial output numbers and the March consumer inflation numbers. In both those counts, you got a slight positive surprise. So February IIP came in at 0.6%. The expectation was a negative 1%. So it's positive in terms of a comparison on expectations to actual. Similar story for consumer price inflation numbers at 10.4%. Consumer price, while it's still very, very elevated, is better than the 10.7 that was being expected and certainly better than the 10.9 that we got last month. So again, a positive from that standpoint. Let's start looking at the breakdown of the numbers and then try and draw some policy expectations out of them. Start with the IIP numbers, and there's a couple of things to point out. One is that beyond the headline, the manufacturing growth of 2.2% is actually not bad. There is some positive indication even on a monthly basis that manufacturing activity is starting to pick up. The only caveat here is that the PMI numbers for manufacturing started to come down in February and then in March. So will the manufacturing stability hold? That's a question to ask. Mining remains very, very negative at negative 8.1%. But if you actually try and look at the counterfactual, if mining had not been that negative, then maybe the headline number would have been even better than this 0.6%. Electricity was bad this time around, negative 3.2%, but there was a significant base effect that played into it. The capital goods and consumer durable side of things within the IIP numbers, capital goods were strong at 9.5%, but capital goods is so volatile. You see a 1 month number, you tend not to believe it, but nevertheless, hold on to it for at least this month. Consumer durables were down, negative 2.7, so there is consumption pressure that's showing up. Consumer non-durables remain okay at about 3% growth. So that's the picture, and that hasn't really changed, barring capital goods, which we'll have to see if it actually extends. On the other hand, there is the CPI numbers that you want to take note of very carefully, because remember, one thing that has kept the RBI uncomfortable is the high consumer price inflation. So if it starts to turn lower, that definitely provides some relief. At 10.4%, it's better than the 10.91%, and both segments have actually come off. So urban CPI has come to 10.38% versus 10.8% last month, and rural CPI is down to about 10.3% versus 11%. And it's food prices, which has started to come down a little bit, even in the open markets, and that could provide some relief. But you're heading to summer months where food prices become very, very volatile. So again, the uncertainty remains. What does this mean for policymakers? Does this mean interest rate cuts are going to continue? Well, here's the way to look at it. The IIP numbers in themselves, I think, have limited implications. The RBI is still trying to digest those horrible GDP numbers, and that from a growth standpoint will be the important indicator. CPI in a turn there will definitely be a relief, and especially if you get the WPI numbers on Monday and the core inflation numbers on Monday, which also remain softer, then that's something that the Reserve Bank of India would take comfort from and then perhaps go ahead with another 25 basis point cut. There are lots of other variables like the trade numbers, the current account numbers, and the ability of banks to pass on all of this, but putting it all together, looks like there is a leaning towards a 25 basis point cut in the May policy.
Right, Ms. Nitsure, factory output in February barely grew. Is there something to celebrate because expectations were of a contraction?
Period of time that any small momentum here there creates a big news. But if you look at the disaggregated level picture, then what comes out is that again there is an outlier in the form of electrical machinery and fabricated metal products, where growth has been 73%, which has kind of brought back capital goods growth in a positive territory and pulled up the overall IIP considerably. But if you remove this item, there has been actually a contraction in IIP. Contraction of almost minus 0.6%. My own prediction was minus 0.5%. So there are possibilities of some data errors. Otherwise, it has painted a very bleak picture. Your mining growth is negative 8%. Electrical means power generation has been hugely significantly negative. Basic goods, intermediate goods have posted negative growth rates. Consumer durables, we all know, major component of it is passenger car sales, and all major companies, whether Maruti Suzuki or Hyundai or Tata Motors, they have shown negative growth rates in their monthly sales. Even two-wheelers like TVS Motors and all, they have shown significant deceleration in their sales. I don't know from where we can have any kind of an optimistic tone based on today's data point.